should we be looking at equity investment beyond India? First thoughts. Let me open with you, Dinesh.
Yeah, in my opinion, when I think about the advantages, disadvantages of investing in global markets, a couple of factors immediately come to my mind. One, when I think about Indian market is well diversified. You have good companies across sectors. From that perspective, we are actually in a lucky spot. But when I think about one area that is potentially missing in India, it is essentially good technology product companies. We have very few of them, definitely not in scale. And so that is one area where if I am thinking about the future, technology is an integral component of it. And when I think about the good technology product companies, they are all based out of India. And so right there, there is a reason to sort of think about investing outside India as opposed to just thinking about Indian companies. And the second aspect is when you think about valuations, there is definitely a big valuation differential between Indian companies and most of the global companies out there. In fact, there are many cases where you have the MNC parent of an Indian company that is effectively trading at close to free valuation or very throwaway valuation. That essentially tells you something about the valuation differential in India versus outside India. So that also makes a case for at least investing part of your money outside India, essentially.
Okay, that's interesting. So two major solid reasons why maybe you would want to look overseas. So let's ask our second guest as well. Nasser, great to have you, join in the conversation. So what do you say when investors come and tell you that, oh, I want to own Apple and, I bought NVIDIA at a certain price and now I've made like 100% return this year. How do you navigate this question of buying global stocks?
We need to kind of understand what is the main reason for investing, in terms of other currencies and more importantly in other markets. I think the main point is diversification in this case. So I think the first and foremost is when you look at international assets, we need to look at something called the hedge against the rupee depreciation, which is available for a lot of Indian investors and for several reasons, right? Historically, for example, Indian rupee has depreciated against, in specific example, the US dollar. Due to inflation differentials, trade deficits, and global economic factors. So when we are looking at portfolios, we need to see how do you kind of ensure that you have a hedge against your original currency, where you're investing money from. Number two, I think what my fellow panelists just said about diversification, which is in terms of better price to earning bands and multiples that you do get with certain, innovative markets, companies, world's largest and most innovative companies like example, Apple, Amazon, or Google. It does reduce dependency on Indian markets and mitigates country-specific risks.
Thank you for watching CNBC TV 18 and do follow us on all our social media platforms for news, updates and more.